Support and resistance, one of the two key things that you can use without even applying anything else onto the market. Today I want to speak to you guys and show you a reliable trading strategy that only consists of trading support and resistance, and how you can utilize it to even potentially flip your own accounts. Now, before we get there, guys, it's very important to know that this should not be considered a substitute for financial advice, and that if you are looking for financial advice, it's best that you do seek financial advice from a financial advisor. This video is purely for educational purposes, and I'm going to share some very cool little things that you guys can use when it comes to trading only support and resistance, nothing else. Now, before we continue, I want to say thank you to our lovely sponsor, that is GOAT Funded Trader, that allows you to trade onto their beautiful MT5 trading platform. They also offer instant trading plans. They've got an in-depth journaling trader on their trading dashboard. They also offer what's known as rewards guarantee. Now, with the rewards guarantee, that basically means that if they do not pay you out within 2 days, they will add an extra $500 to your payout, right? They also offer free trading competitions and multiple payouts with Rise, Crypto, and Skrill. They also offer 100% split, and they have a reward system where you can gain points and basically spend those points through their system on there as well, right? They allow stock trading on the MT5 platform, and they have over $13 million in payouts. Now, they also, I will leave a link in the description box below, guys. Check out GOAT Funded Trader and grab 40% of your first purchase. Now, let's get straight into the information, guys. Now, this is one of those strategies that I have traded way back when I started trading, and this is very beginner friendly. So even if you are a beginner trader, you can use this or you can learn to apply this in the market. And these are one of the things that you will see happening across the market every day without even realizing that it's taking place through there as well. Now, the first thing that we do have to talk about is support and resistance, right? Now, the way I'm going to explain it to you guys is that support, as I've learned it, is also always considered as the floor. Now, the way they taught us this is that, support is called the floor. Right? Support is known as the floor because support is the lowest place that the market can go. Now, if you are a new trader, you will understand, you will learn this, and you'll be able to apply this as a professional trader without even having the knowledge of how the market actually works, but just by the reading the price action in the market in the way that I'm going to explain it to you now. Now, support is considered the floor. And then there is another level which is considered, it's called resistance. And resistance is called the ceiling, right? Resistance there, it's called the ceiling. Can I say like that? I'm not sure if it's spelled correctly because why? But that kind of makes sense in my head, right? Now, you get two levels in the market. The one is considered support, the other one is considered resistance. To give you an example, this over here is the ceiling, and this would be the floor. The floor. Remember, they are at the bottom. That was just some examples, some live examples in the market. Now, as a general rule of thumb, what you want to do is when the market comes towards the floor, there is a high possibility that the market is going to bounce from the floor, because remember, it cannot go lower than the floor. That's one thing you have to keep in mind, that we cannot go lower than the floor. Therefore, we expect the market to pull back from the floor. So the market would hit the low, right? The low of the house, which is the floor. And then from the floor, it would then bounce off the floor, and then it would continue higher. Now, for the ceiling, we would, as a general rule of thumb, is when the market hits the ceiling, it cannot go any higher than the ceiling. So we expect the market to do what? To come down from the ceiling, because it cannot go higher than the ceiling. Remember, the ceiling is the highest place, and we have the floor, which is the lowest place in which the market can go. Now, once the market reaches these levels, you can definitely expect the market to bounce off these levels as you've seen it there. And I'm going to show you guys a couple of examples in the live markets also. Now, this is called price action, right? Is when the market reacts of certain price levels in the market and they bounce off these levels. Now, it's important to understand that the ceiling can become the floor, and the floor also becomes the ceiling throughout the entire process. And this is what I'm going to explain to you guys now, right? Because why? Because the market tends to continue to make these moves all day, every day. It continues to make floors and ceilings. As you can see, if you zoom out, you can see the market continue to make floors, and then it makes a ceiling, then it makes a floor. So you can see it makes a floor, then it makes a ceiling, then it makes a floor, then it makes a ceiling, makes a floor, a ceiling, and we've got another ceiling, we've got a floor there, we've got a floor, we've got a ceiling, we've got a ceiling, we've got a floor, and the market continued to make these things. But sometimes the market go above the ceiling, and then is when the ceiling becomes the floor. Now let me explain this to you in a way that you would understand. So remember that we said that this is the ceiling and this is considered the floor. Now, at what point does the floor become the ceiling? Very easy. Is when the market comes from the bottom up and it breaks through the floor. And then that's when the floor becomes the ceiling. And I'm thinking about what I'm saying, and my brain's telling me, just make sure what you're saying is right, because I'm trying to just make sure that I'm right. Okay, let me go back and say it again. So the floor becomes the ceiling when the market breaks below the floor. Remember what I said is that the floor is the lowest point that the market can go. And whenever the market comes towards the floor, we always expect the market to bounce off the floor. But like everything else in life, when there's too many bounces on that floor, it tends to crack, and before you know it, it breaks right through it. Now, when the market breaks right through the floor now becomes the ceiling, like that. Why? Because the floor is now not at the bottom where it was when this price was coming towards it. It broke through the floor, and because the floor is now at the top and not at the bottom, the floor now becomes the ceiling, because we know that the ceiling is on top and the floor is at the bottom. I hope you guys are following me. Now, the same thing goes for the ceiling. Because we expect the market to hit the ceiling and pull back from there, because the ceiling is considered the highest point in the market, right? We know that. But remember, when the market hits the ceiling a couple of times, eventually the ceiling starts to crack and the market goes right through the ceiling, right? It goes like this. It keeps hitting the ceiling, and then the ceiling cracks, and then boom, it breaks through the ceiling. And then because, remember, the ceiling is supposed to be there, but because the ceiling has now been broken and it's now at the bottom, the ceiling is now not, if you look at it here, the ceiling used to be there, it used to be on top. Then the market, the candle broke through it. Now the ceiling is at the bottom, and by definition, the ceiling now becomes the floor. Now remember, as a general rule of thumb, the same rules apply, because now we've got a new floor that we can keep hitting into. Remember, it takes a couple of hits on this floor before this floor actually breaks, right? It takes a couple of hits on the ceiling before the ceiling eventually breaks. Now that the market has created a new floor and a new ceiling, by definition, that means we now have a couple of opportunities that we can hit that ceiling, or we can sell that ceiling, and vice versa on the other side, right? I hope you guys are following. Okay, I hope you guys are following. Now let's look at some examples, right? Here you can see, here we are at the market, okay, and we're going to use this level very, very easy, and then from there I'm going to explain to you guys how you can utilize this, right? Here you can see the market created that ceiling. It hit that ceiling once, it came down, it hit that ceiling twice, it came down, it hit that ceiling thrice, and then the market, the last time it came to that ceiling, it broke above that ceiling. Why? Like I explained before, that the market will only hit that ceiling a couple of times because the ceiling became weak after a time, and then the market broke through it. Now, for any expert that's going to say it's not a ceiling, it's considered resistance, if you know anything about education, you would understand it's the best way to explain it to somebody. that might potentially not understand it, which is why I refer to it as ceiling and ceiling and floor. So to give you another example, right? If we look at this example here, right? Let's use this level here. Here you can see the market created a floor. From there, it hit that floor once, it went up. It came back, hit that floor again, and then it hit that floor, and then unfortunately it hit that floor again, but then that floor couldn't hold anymore. Why? Because the cracks started to show. The floor became weak, and the floor couldn't withstand that pound, 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 pound. So how do we make use of this? Very easy. We lean towards the fact that the market is still busy cracking these numbers. To give you a good example, when the market prints a new structure in the way that it did here, right? Here. For me in this case, I would see this as a test or a busy cracking the code. And now most people might say, yes, but how do we know that it's going to hold or that it's not going to hold? Well, if you remember a video that I've made previously, you would know exactly what it is that I mean by that. And you can apply this on every time frame. Now, we can see over here, if you put that here, you will realize that this level over here got tested once. It came back, tested it again, and you can see there we had a pullback there. To give you another good example, you can see the cracks that I was talking about earlier. This level's here, even there. But we're going to talk about these levels, these early levels in the market. You can see here, the market came and tested that level, come back to crack that level, came to crack that level, and eventually broke through it. So in a situation like this, what you would have done was you would have sold there, you would have sold there as well. Now, I know people's going to say, but it's not as easy as it sounds. Trust me, you have a higher possibility trading around these levels, not these levels, because you obviously need to wait for confirmation. And the way you wait for that confirmation is that you wait for the market to continue or to print the structure to the upside. Now, I'm not going to talk about this because I spoke about it in a previous video. But to give you guys some clearance on this, the best thing you can do is trade these levels that the market creates every time. And these are just simple support and resistance concepts that you can trade. And the higher the time frame that you trade it on, the better that you can be. Now, what I want you to do is that I want you to identify these levels in the market. Go look for them. See where the market create them. See how many times the market bounced off these levels and how much you could have potentially made from this. Now, this video is probably going to be like an hour, 2 hour long. And I do not want to drag it for that long, right? So I'm going to stop the video here. And I want to ask you guys, go check out these levels, see how many levels you can identify, and see what would have happened if you have taken the trade. Even if you have to do this, right? Even if you have to look away, you don't look at the screen and then you look and then you say, okay, I'm going to go there, right? Now you put that there and you say, every time the market comes there, I'm going to sell. Then you could have seen there, right? I would have probably sold there and then the market, and then that ceiling, it didn't hold. But if you this week would have probably, if you were on a lower time frame, you might have gotten in there. Then you would have come here, you would have seen, okay, here is a level, and then you would have probably bought there, right? Boom. Then you would have seen, I would have probably been stopped out. And then you just keep going through this and see how many opportunities you would have had should you have followed pure price action and support and resistance in the market. Guys, that is it from my side. Thank you for your time. And as always, cheers for years.